Admittedly, there are a ton of trading systems out there that do work. However, the hard part is finding one that resonates with you and then becoming an absolute professional in that style of trading. Not system hopping, not strategy hopping, just becoming the absolute best trader that you can within that system. Ladies and gentlemen, in this video, I'm going to walk you through and take you from a very large scale setup within a weekly template all the way down to the 1-minute chart and give you a step-by-step process that you can follow for every single trade that you ever take from here on out. So that way your next trade could be your very best. I am curious though, what do you currently struggle with in your trading? I would love to hear it down in the comments below. And before we get started, hit that like button, subscribe to the channel if you have not already, and enjoy this video. I'm about to break down from the very top in a way that most people have probably never seen before. Please bear with me. I'm about to say a lot of words. There's not going to be a change in scenery for a little bit. Please focus on what I have to say. It's very important because this is how I have categorized, processed, and have kind of put everything together and filled in the blanks within this trading system so that it all makes sense, and I want to share that with you. This overall trade strategy, the system, I tried to take all of the information when I learned it, and I tried to mash it all together into one big blob. And it was very difficult. It was very stressful, really, to try and figure out what everything meant. The way that I fixed that was I took all of the information, and then I filled in the blanks for myself. I took all the information, and I said, this is what I don't understand. I'm not going to search for the answer through other means. I'm going to figure it out for myself by studying the charts, and then I filled in the blanks. I developed it into my own little system, and then that is how I've been trading it ever since. For those of you who don't know, I am not taking credit for it. I have learned this entire system from Stacey Burke, and then, like I said, have just filled in a few blanks for myself, and then continued to develop it into what it is today. So if you want to check out his channel, I really encourage you to. He has about over 1,000 videos, really great information. Please, I'll put his link down below. You can go check out his channel as well. This allows you to take all of the jibber jabber and just filter it out. All right, because this top box right here, part A, weekly templates, signal days, 3-day cycle. That is how I categorize the overall trading setups. I tell myself, okay, which trading setup on the chart am I looking at? Weekly template? Is it a 3-day cycle setup? Is it a signal day setup like first red day or first green day? Then, once I've identified that larger setup, I start going and trying to find supporting information that will support my claim for why I should take that trade. Things such as 3 pushes, 3 levels, structure, major highs, minor highs, breaks in structure, continuations of structure, breaks of structure. Where is the volume trapped within the week? Are we at the high of the week? Are we at the low of the week? Are we at the high of the month? Are we at the low of the month? Those type of questions all help me to support my main setup, my main thesis. These are all supporting things that go into it. All right. Once I have a collection of ideas, I then need to break it down further, and that is what the rest of this video is going to be about. The main setup, I'm going to show you a collection of them, and then I'm going to break it down from there for you so that you can know exactly what to look for every single day. The points that we're going to be focusing on within this tips and tricks are going to be 5 and 6. 1, 2, 3, and 4, and 7 are all for the Monday, Tuesday, Wednesday templates. Those are things that I've already covered in a previous video. But before you go watch that one, especially if this is your first time viewing, just watch this one through to the end, and then please go check out that other one. By just viewing this one is not going to hurt you having not seen the other one. Okay, so just bear with this video. 5 and 6 are what we are going to be focusing on. 5 is 3 drives out of the opening range coming into Friday. And if you don't understand what the opening range is, I'm going to explain it in the next slide or within the next couple slides. Friday has a high potential for a large reversal. Number 6, if there are only 2 drives out of the opening range coming into Friday, there's a high probability of a parabolic trend trade on Friday. Basically what this is saying is that Friday is either going to be a reversal or a trend continuation of the week. And I'm going to show you exactly how to identify each one of those now. In my opinion, the 3 pushes out of the opening range is not only one of the most lucrative and easy to identify setups, but also it shows up the most often within the weekly templates. The opening range, it can be easily identified as the highest point and the lowest point that Monday has traveled. When Monday opens, they will make a low, they will make a high, and then the day will close. The lowest point and the highest point get a line all the way across from Monday all the way through Friday, and that range will stay there all week long. It does not change. Monday's range will not change. The way that I objectively identify 3 pushes or 3 drives out of the opening range is I use pretty much the previous day's low. So, for example, we have now dropped out of the opening range, and then they did close right here. So I would just use the previous day's low, Tuesday's low, to say, okay, if they go through that level again, I will have my second push, and then I will draw my line once again. Then, if they were to travel through that again, I would have my third push. And if you see, we've done that third push on a Thursday, which means I could come into Friday already with a few different ideas. Remembering back to my first slide where I talked about compartmentalizing and identifying information, the overall trade setup could be 3 pushes out of the opening range, but I'm also looking at the signal day. I have 3 days of previous day's low being triggered into the market. I have 3 days of short traders, short breakout traders in the market. A lot of times, at the end of the week, they will go back for the money and stop those people out one way or the other. That's the kind of whole premise behind this trade setup, is they will go back for the money towards the end of the week a lot of times. So I use things like, where is the volume trapped? Well, they're traded, they capitulated down through Wednesday's low and have been trading down low, trading into the low of the current week. The lowest point within the week, kind of in this little box here, where if they were to go back up in my session, they could have people stuck down low at the end of the week. Here is another example of 3 pushes out of the opening range throughout the week. We have Monday's high and low. We have Tuesday breaking out as 1 push, Wednesday, second push, Thursday is the third push, consolidation. Notice that remember one of the supporting things that I need to see is volume trapped, break in structure. They have now made a lower low after making a series of higher highs. I am slowly but surely going to break this down. This, again, is a large trade setup. And I start looking for little supporting information within the large trade setup, such as where has there been a gap in price? Where are levels where they have floated price above another level, basically engineering money under a level so that they can go back later on and grab it. Where's the volume stuck? Well, it's stuck at this big rectangle at the high of the week above the high of Wednesday, again, just like the last example. And then I need timing to make sense. 9:30, the equity hour open within the New York session. There was a break in structure, a 30-minute pullback, and then right at 9:30 was the engulfment down to complete the pattern through the low. Remember I said that you can use signal days in combination with these 3 pushes out of the opening range. You don't just have to look at the opening range. There's lots of other confluences that you can use in combination. So we have the low and the high of the opening range. We have our 3 pushes out. And then on this Thursday, the day that we're looking to see, do we have the 3 pushes down? We also have a first green day, a signal day now where we've opened, traded down after a large dump, and then traded and closed above the opening price of this day. Again, trade down, big dump, looking for where that dump began. A day that is traded down through the previous day's low, and then closed back up above the opening price for the day. Essentially, it closed as like a doji candle on the daily chart. That is an ideal candidate for a first green day. On the following day, again, trading down towards the low, and then you get a low of day, low of session trade setup, down from towards where you're supposed to, really, this trap volume zone, which is one of my scenarios that I use for a first green day, a retest of that zone. Structure all makes sense. We even have this nice little head and shoulders pattern for that reversal trade back up towards the high of the week. I told you that there was another scenario other than just 3 pushes out of the opening range. 3 pushes down is usually used to identify a reversal trade within that Friday. However, if we only have 2 pushes down coming into Friday, For example, Tuesday was the first push. They pulled back, went into consolidation, and then gave you that second push on Thursday. Obviously, there's only 2 pushes down. We might be looking for that third. So they pulled back. They made a lower low on the day right here. Context is important, right? I want to look at all of my supporting details that could maybe go into this trade. They pulled back, and then they broke back down into the session, right? We had a low, higher high, boom, lower low. Once we get a lower low on the 15-minute chart, I am now looking for 3 pushes back up. Those 3 pushes could come in 1, 2, 3, 4 candles on the 15-minute chart. But on the 1-minute chart, that is where I'm going to get a lot more detail. And then using the time of day, the time in my session, I will be able to make better trading decisions. For example, we had a break-in structure. We made a lower low, and we started jamming back up into the high of the session. The new hour opened up. We have this little triple top, sort of an M structure on the 15-minute chart. It broke down in that last hour, and that was the trade. Attempting to get that third push down. It didn't quite follow through, but it would still be plenty for a trend trade back towards the low of the week. That is kind of where I would look for a trend continuation on a Friday. There's lots of other scenarios that I've actually put into this slideshow that you can look at for Friday. For the sake of time in this video, I'm not going to explain all of them, but if you do want this slideshow or you want to save it, turn it into a PDF, the link to this slideshow is actually down in the description below. Please go grab it. You can go back, watch the video again, maybe follow along with the slideshow so it helps you to understand, or just download it, keep it forever, and you can just reference it into the future. Now we're going to start really getting down into the nitty gritty, down into the details, all right? These 2 links down here are the only 2 patterns, the only 2 presentations of price once I've identified a larger setup that I am looking for. Once I've identified a larger setup, I want to see one of these patterns when it starts to get closer for me to take my trade on the 15-minute chart for a larger scale setup. Okay, so if you want to go to these links, they will take you to free downloads, free slideshows from Google Docs. You can just download them. Again, same as this whole slideshow here. PDFs, you can have them forever. They're yours. So what I'm saying is the overall setup has been identified using that tips and tricks slide from earlier in this video. Great. We've identified a larger setup. Now, we need to start using supporting information. How in the world do we do that? Cool. Let's figure it out together. All trades will present as either a short squeeze, long squeeze, or a parabolic trend trade. That's the only presentations of price that I want to see. And I'm going to explain that here in a second. Number 1, I wish I could put this in all caps, highlighted, in all over the place. I wish it was just flashing at all times, but I think that people would probably just click out of my videos. Market structure is number 1 at all times. Everything else, just throw in the dumpster as long as market structure does not line up, all right? And if you want a really great in detail video about how I view market structure, I have a video on my channel about the 1-minute chart, and I'm going to actually review that here in a second, but it's much more in detail than I could ever get just with this video. And then once I have market structure telling me, hey, market go up or market go down, I will initiate my entry criteria, which is what we're about to get into right now. What's really great about my entry criteria is it does not matter which setup you ever see me take. It doesn't matter if it's a first red day, a first green day, a session trade, a weekly template trade, signal day. It doesn't matter. I could pull up a MACD on my chart, which I would never do in my entire life, and start to try and use that, and I would still use the exact same price action criteria. Because it works. It works for me. I think it works in general. It's what's kept me consistent. It makes things very rules-based for me. So now, again, I'm breaking it down from large setup, which is what's up here on the screen. I use the 15-minute charts only to identify my setups. 15-minute chart, 3 pushes out of the opening range. That's the setup. Check that box. Awesome. Now I need to start using supporting information. I have my third push on Thursday. That's not hindsight. When the day closes, I already have that. I know that is a fact, and I know that on the next day, I can start looking for certain things. On the next day, I need to see market structure tell me market go down. How do I identify that? Well, we had a major swing down here. This is the overall place where the market started going up from. Cool. I've got my line. Then the market has now started to make a series of minor swing levels. Higher high, higher low, higher high, higher low, higher high, boom, lower low. Okay, cool. We can check that box. As long as they continue to make lower lows and lower highs, my trade's still valid. I can still use that. All right, now I need time of day to make sense. I need to be in my session, 8 a.m. to 11 a.m. That's my session. So over here, we are in my session. You can see kind of, poor reference, 12 a.m. It's in my session, okay? Engulfing candlestick, 9 a.m. Right there. So if I'm in my session and I get a chart pattern, boom, 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 triple top, I've got my low, I've got my high, we've been just jamming up into that high. How do I know if I have my trade? Where in the world, Cameron, do I enter this trade? You're on the 15-minute chart. I have no idea what you're doing. And that's where we're going to get down into the lower time frames in our session to try and figure out what's happening. I want you to remember the fact that we are already making lower lows and lower highs on the 15-minute chart, because that part is step number one. That part needs to happen first. We made a lower low on the 15-minute chart. We made a lower low on the 15-minute chart. I'll say it one last time. We made a lower low on the 15-minute chart and have been pumping back up without making a higher high. That's key. Not making a higher high. That's the high. That's the low. And we've just been trading in the middle. Very important piece to the puzzle. Okay, now, this is the step-by-step with words up on the screen and also with me speaking them, as well as looking at the picture. This is now a 1-minute chart of that 15-minute chart that I just showed you in that last slide. Step-by-step, 15-minute break in structure, break of structure. We made a lower low on the 15-minute chart. That was step number one. I showed you that in the 15-minute on that last slide, and I said it like 7 times. 15-minute, 3 pushes. You need the 15-minute chart to start pushing back up against the direction that you want your trade to go. When the 15-minute chart starts pushing back up, that is going to put the 1-minute chart into an uptrend. If you want the market to go back down and the 1-minute chart is now in an uptrend, it needs to flip around, and you need to have a set in stone way to identify that the 1-minute chart has flipped around. My objective way of doing that is I mark off my highs and my lows, and once it stops its little uptrend and it breaks down, it breaks structure to the downside. We were making higher highs and higher lows on the 1-minute chart, and then it broke structure in my intended direction. That is the first mouse. The first mouse is triggered into the market. The market goes through a checklist of things to basically take advantage of traders. It wants to make as much money as possible. It's going to get people to short. It's going to go back and stop people out who are already short, who got the trade right. It's going to go back, maybe shake people out of their trade. It's going to go back and it's going to trigger people in long, get people to start longing the market again. It's basically just going to do everything that it can to make as much money as possible. First mouse. Okay, so now I need to wait for 3 pushes back up on the 1-minute chart. Step 4. 1, 2, 3, it's engulfed. Okay, so if I'm not in there, because there's no chart pattern, which is number 5, right? There's no chart pattern there. I cannot get into this market yet. Once they break down again, they've made a lower low on the 1-minute chart. So I need 3 pushes back up. We are now in a trend. We made a lower low. Now we made another lower low, and I've got 3 pushes back up. All right. I have a push up, a down, a slight doji candle. It engulfed, broke down, made a lower low once again. This candle right here, or this time right here, 9:30 a.m. It made a lower low again. If you got in here, that's fine. You know, take your little scalp. Maybe it starts to flip around. You're at break even. They stop you out break even. Maybe realize that, hey, I got in a little too early. Push 1, push 2, 1, 2, 3, triple top, engulfment after 9:30. That is the more optimal entry. Not because this is where the market actually started to go down strongly from, but because this chart pattern is much better than any price action over here. This is far more clean. This pump is far more clean This engulfment, it's just far better, okay? The pattern is better. This entry criteria right here, also over here in just slightly different words, is the one that I use every single time. I would like to reiterate one last time. Break structure, 1 minute chart. Pump up, 1 minute chart. I need 3 pushes back up after they make a lower low on the 1 minute chart. Push 1, push 2, push 3, ending in a 1, 2, 3. I need a chart pattern. Chart pattern. Triple top. 1 push, 2 push, 3 push. That is a triple top. Engulfing candlestick that takes out the middle structure of that pattern. That is my first entry every single time. That candle that engulfs the chart pattern will be my entry every single time. Okay, now I just want to show you through live examples of a trade that I actually did take last week on GU. This was the week of, July 31st through August 4th. That was this week. The setup was exactly the same as we've already talked about. I've identified the trade as 3 drives down out of the opening range. Here's a picture of the setup on the day that I actually took it. This was the break-in structure on the 1 minute chart. All right, this is the 1 minute chart. This was a news candle that exploded straight up, exploded up and broke structure, and then started to come back down in one candle, second push down, third push down, down, up, down, engulfment. This was 1, 2, 3, 4, 5, 6, 7, 8, 9. So 10 minutes after the news, right before the next 15-minute bar was about to open, we got an engulfment. You can see that I added my first position there. I started to add in, and as we rose, I took a little bit there, took a little bit there, added back in, took off the rest of the position up here. Okay, so I was adding, taking a little, adding back in more, and then taking the rest where I felt comfortable. Looking at the overall position right here, let's identify the opening range high and the opening range low. It's pretty easy. You just take the high of Monday and the low of Monday and draw your really ugly little box here going across the screen. And then very easy, you just look and see, okay, well, this was the first time that they drove out of the opening range. That's the low of Tuesday. And then this would have been the second time on Wednesday. I'll take the low of Wednesday, project that across. And then now Thursday has gone down one last time. Awesome. So that just kind of checks the box, right? We've got one push down, we've got our second, and then of course we do have our third over here on this Thursday. Coming into Friday, let's take a look at structure. What has happened on Friday before I even came to the screen in New York session? We had a low, we had a high, we had a lower low, and then you guessed it, we had made that higher high. So this is my higher high on the 15-minute chart, break-in structure. As we said earlier in this video, I now need 3 pushes back down. They start driving back down. 1, pull back. 2, pull back. 3, into the session, consolidation. We've already had our major break-in structure on the 15-minute chart. This is my cue to get down to the 1-minute chart. We've already had our break. We've been going down. We're in a downtrend right now on the 1 minute. I need to see that change. Okay, so cool. Let's go down to the 1 minute. Now, we're in the session. The news is about to hit. I do not take trades before the news, so I need to let that play out first. That being said, my criteria remains exactly the same. We had a low, we had a high, we had a lower low. So I've got this little high up here. We're basically just in a box, and I need to see something change for me to believe that this downtrend on the 1 minute is over, and I can look for the rest of my entry criteria. So it's going to go, and the news is going to explode, and that was the news candle right there that you saw from my really nice little drawing right here. And then we're going to get our push down, and then finally our little push down. And about 10 minutes before, or I'm sorry, after the news candle, we have our engulfment. Okay, so we can buy. And then as this next candle goes, we'll buy a little bit more. And then as we continue, and it'll just, continue to go. So what was the actual criteria? What was the repeatable set in stone rules that I use? We had a low, we had a higher high On the 1 minute chart, we had 3 pushes back down because this would have been the first mouse. I have my down, up, down engulfment. Timing, we are in the first hour, but that's okay. We had news. This is a first bounce opportunity after we've made a higher high on the 1 minute. Also after making a higher high on the 15 minute. Also after having 3 pushes down on the 15 minute chart out of the opening range. Also while having a nearly first green day on this Thursday. We had a day that opened, traded down, and then closed pretty much a doji candle on the 15-minute chart. I'm sorry, on the daily chart. So that was a lot of confluences in place, ready for a large scale trade setup. Now you have the criteria. You have the tools and the things that you need to go forth and backtest and burn these patterns into your brain. This is just one trade setup out of many, but the criteria remains the same. So you can go back and look and see, okay, there's the break-in structure. There's the 3 pushes back down. There's the W. There's the M. All of these different things, and start to burn that pattern into your brain. So that way, when you see it next time, it'll be almost like a knee-jerk reaction, and you know exactly what you're looking for. Ladies and gentlemen, I hope this video has been useful to someone. If it has, do me a favor, hit that like button. Subscribe to the channel if you have not already. You'll have a wonderful day.